Money making money making money.
Come on, you gotta tell me, how is this even possible?
It's easy. 1, you take your money and you put it in this secret spot. 2, you let that money grow with compound interest. 3, then you find a place for that money to go where it can work for you. 4, and then every Wednesday at 1 p.m. Eastern, you join me for a wealth webinar.
I'll do it.
It's free. Plus, if you join me now, you'll get my free ebook that teaches you to get all the money back for every car you buy, drive, and own. So take advantage of this opportunity and I'll see you there.
Hey, are you ready to take control of your financial future? Welcome to Private Money Club. Private Money Club is the ultimate online platform connecting real estate entrepreneurs with private money lenders just like you. Whether you're looking to fund your next deal or lend money to grow your wealth, Private Money Club is your go-to resource. You can post deals, find funding, connect with other like-minded professionals. It's just a community. It's a community that you need to plug into. If you're new to the game, no problem. Our Learn platform and our weekly coaching webinars and our on-demand resources are here to guide you every step of the way. Join a thriving network of real estate experts who are already making an impact, and they're waiting to partner with you. So Private Money Club gives you the tools, the training, the connections, and everything you need to achieve your financial goals. So why don't you start now by going to privatemoneyclub.com. We'll see you inside. Hey, you need to become your own bank. And it's as simple as changing one thing, and that is where your money goes first. I mean, think about it. Household debts in this country are at all-time highs. You got tons of market volatility. You got the potential for Social Security running out of money. You've got global uncertainty, political divide, and you have to figure out where you're going to put your hard-earned savings. I mean, this is one of those times in history where the rich are getting richer, and it is time to learn the secrets of the wealthy. But here's the good news. Every single Wednesday at 1 p.m. Eastern Standard Time, I put on a free webinar where I teach you how to take back control of your money by teaching you how to become your own bank. So click the link below and let's get started. So let's go into the app, because the app was created after a dating site, believe it or not. So people with money and people that need money. Phone, swipe left. Swipe left. Ooh, I like that one. Swipe right. You want to go on. If you got money, you want to swipe left through all the deals. When you find one you like, boom, you're connected. How much more difficult does this really need to be? This isn't rocket science. They want you to think it is because they want control of your money. It is time to take back control of our money. I want to invite you to a free interactive webinar that we're doing to teach you how to get prepared for what's about to happen and how you can grow, preserve, and protect your wealth and get it ready for a recession or maybe the next Great Depression. So all I need you to do is click the link below. You're not going to want to miss this with all this stuff going on. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris. So that's what it is. Private Money Club was created for you and for all of us. So I've got something special. Since you're here, you're listening to us talk to you about the infinite banking concept, I wanted to make an offer. Private Money Club is something that will benefit each of you, but we've got what's called the Accelerator. The Private Money Club Accelerator is a coaching program that takes together the knowledge that you'll need to be your own bank and puts it together with the opportunities in Private Money Club so that now you learn and apply the knowledge. Check it out. We got a very special offer for you to be part of the next Accelerator coaching program and get you into Private Money Club so your money starts working for you.
Hey everybody, it's Buff Finance Guy here, ready to show you how to make some serious gains. But not only in the gym, with your wallet too. Most people put their money in the bank doing absolutely nothing for them. But I'm gonna show you how it doesn't have to be that way. So take Andrew here. His money has just been sitting lazy in the bank. But all he has to do is change one thing, and that's where the money goes first, and everything changes. Just change where your money goes first, silly.
Wait, just one change?
Yeah, that's it. Instead of sending it to the bank, you send it to your very own banking system. Your money can grow and get stronger, just like me.
It's time for Money School TV. You heard it straight from the horse's mouth.
He's been on the fence to come to PMC Money Take. I'm telling you right now, you're missing out on a treat.
This is the ultimate watering hole for lenders and borrowers.
If you've got decent deals, you'll find the funding for it.
The networking here has been fantastic.
Absolutely phenomenal.
Tremendously beneficial.
Oh my gosh, so many people to network with.
First day, I probably met 5 or 6 people. They show me ideas, I show them ideas. We're actually on stage about 20 minutes ago, and since then, I've already had about 20 people reach out.
There are several people that I probably will be doing business with.
I have like 15 private lenders ready to fund my deals. The people here are amazing and so welcoming.
You walk in, everyone greets you right away. No one is a stranger.
It's just an amazing and comfortable place to be.
There's so much stuff that I've been able to learn that I didn't know. I've had aha moments over and over again.
They talked about normal rates of return, not 6%, we're talking about 10%, but in a way that's ethically sound and stable. It's full disclosure, but helps walk you through everything. They even talk about it on stage of like, we've already made the mistakes, so here we are, and we're teaching you to not make the same mistakes. You get to learn from us, you get to just follow our direction and just see what you can do. I've gotten great things out of the virtual events, but there's no comparison to actually coming here, experiencing the energy, and getting to meet all of the people. Everyone is here looking to grow in some capacity. Being in this environment, it allows you to feed on that and foster that.
During the event, they had a lender-borrower meet and greet, which is pretty cool.
It's different when you can spend some time, have a meal together, hang out, joke around. The people are just a blast.
It's so much fun.
The community of the Money Tank PMC, the whole crew with Chris, Stephen, Jonah, everybody, and Joe, they've all helped me out. It's been changing my life.
You're gonna learn something, you're gonna meet someone, and it's definitely gonna make a big difference in your business. Not by a little bit, but by a lot.
I mean, you could stay stuck thinking you can do it on your own. There's a lot of people that I talk to is their issue, and then they come here, and I talk to them a year later, and they've grown so much just by coming to this event.
Started at $15,000 in credit card debt. As of today, I have $550,000 out in private lending. That's what this teaches you.
I tell people all the time, you have to get in the room to be around the like-minded people.
Go. It's worth it.
Just come. Do it for yourself. Do it for your business.
Take action. You got to do it.
Come to the event. You don't want to miss it.
Well, the biggest thing I hope that people get is something that they can actually apply in their lives. You know, that's the biggest thing for any of these events that we want. We want people to leave here not just riled up, not just excited, but actually going out and doing something that'll put them in a better financial situation, help their family. And for the speakers, my goal is that they go out and they impact the audience and bring something the audience never had exposure to that allows them to then fill in that piece that they're looking for. I'm going to be talking about more lease options. I'm going to be talking about equity shares. I'm going to be talking about a bunch of fun stuff today. Because again, I'm not here to teach about how to do those deals. I'm here to teach about how to invest in those deals.
Filled with individuals that are like-minded, that are at the top of their craft, they're at the top of their game. And for anybody that's an attendee, it's just a mind-blowing experience.
It's almost going to be hard to speak anywhere else but here because it was such a great experience. I felt like, I don't know. It was amazing. Nothing less than amazing, literally.
At the PMC Money Tank event, which is an epic event that we're putting together that does one thing and one thing only, makes everybody money. It brings people with money together with people that need money. It's like a peanut butter and jelly sandwich. You just smash them together and everybody wins.
Wednesday, 10:30 Eastern Standard Time. Going live! Hey, Chris, I have no sound. I don't. Can you hear me? I can't hear anything you're saying if you're talking. I don't. It might be me, but.
Can you hear me now? Check.
Yeah, I can hear you. Gone.
Yep, my computer reset. Anyway, let's restart that. Welcome, everybody. Another week, another What the F Happened, joined by Mr. Lazy Cash and Mr. Snaggy in the house. Lots to talk about today. Lots of stuff. As you may or may not have heard, Trump and a bunch of high-powered execs, which we'll get into in a second, took a trip out to, just right over the pond to China to meet with Xi Jinping about some things. And, the only thing that really came about of it is a bunch of stock prices raised questions. But the bond market, I think, is the bigger story here. The bond market, if you've been seeing it in the news, and a lot of people don't fully understand the yields on bonds, but the 30-year and the 10-year, the yield has been skyrocketing, which means the price of those bonds has been going down. It just shows massive weakness. It shows that there's literally a lot of fear out there. And, not only that, the Fed, the decision that just happened recently about whether rates should go up or down, was the most divided in 34 years. Literally, like, they just cannot decide whether rates should stay, which many of them think they should, or rates should go down, which would be really nice for the real estate market, which has been in a deep freeze. I say the real estate market's been in literally a recession, a deep recession, because of rates. I mean, you got too many people that have houses, and you have a lot of people that can't buy houses because rates are too high. So they're priced out, which leads to right now, there are far more sellers than there are buyers. It is 100% a buyer's market. Pricing is falling, and you will see that continue as the pressures remain. But it all hinges on what decisions is the new Fed chair going to make. And we don't have answers on that because it's just a hard one to say. If you drop rates, you're saying that the economy is weakening. You're saying that we're in trouble. You're giving a lot of signals that may or may not be the case because earnings are coming out strong. Just today, I just saw Target just came out and they beat their estimates. So they're hiking sales. People are supposedly shopping more, but yet everybody's broke. I can't quite figure out what's going on. Wall Street's going up and up and up. But yet I hear every single day that people are struggling, living paycheck to paycheck, having a hard time with the higher prices. Inflation's on the move up and gas prices. So there is a massive, massive disconnect between Wall Street and Main Street. And we're going to hit on that one today. But not only that, there's another interesting thing happening, and that is more Americans are leaving the United States of America than people are coming in. And that's, I don't know any other period of time that that's happened, but they're also saying that smartphones are killing birth rates. Right now, the United States is kind of one of the higher right now with birth rates at 1.6%, the replacement need, in order to keep things growing, where everybody else like Japan and China are far off of that. So we'll hit on that. And while Trump is receiving roses in Beijing, you got a mayor in California being convicted or admitting to being a Chinese spy. I knew they were over there in California. And then you got other people putting HIV and other things in fruit juices. But nonetheless, nothing to see here. And Stephen, anything you want to unpack outside of the fact that the Sabres did not advance, which sucks, but oh well, here we are.
You guys got robbed in that game, man. There were some bad calls. The kick-in goal, that was garbage. The last one, they blew the whistle dead. That should have been the game winner.
The Buffalo thing, man.
You guys, I mean, the curse of Buffalo sports is real. So I feel for you up there. You guys have terrible weather and can't even get the sports game together. So maybe one day, right? But that's what makes it all fun and worth watching. So with that said, I want to unpack some of the stuff you just mentioned, and maybe we'll bring up some other stuff. Where's our other co-host, St. James, today?
He might be coming on a little bit later, but he got hung up with a inspector or an inspection of one of his rentals, which is a very common thing here in New York as well.
Gotcha. All right.
Yeah.
Cool.
So you want to move on to economy, and as we build the audience, we'll answer all your questions. So throw them over there in the comments. We'll be right back. All right. Well, thanks everybody for joining us. Another week, another What the F Happened. I'm so happy that Mr. Lazy Cash decided to join us front and center today. But let's talk about one thing. All right. Let's talk about what all these individuals have in common. Let me name them: Elon Musk, Tim Cook, Larry Fink. We got Kelly Ortberg. You got Steven Schwartzman. You got Jane Frazier and Jensen Huang. What do they all have in common? Steven? Anyone? What do they all have in common?
Money.
Dependency on China. That's it. That's what they all have in common. They all need China to grow their businesses. Every one of them. And they were all on the plane with Donald Trump. And they went over to China, which Trump said was a massive victory. But I am just having a hard time, like Wall Street is, in figuring out where the victory was. Because the only thing I see is that, you bring all these high-powered execs out to China to try to strike deals or whatever you want to call it. And I don't know. I don't think anything productive happens. But let's kind of talk about that. First thing I want to talk about is, why would China want, because China's communist, why would they want Trump and these different individuals to go over there? I have that pretty well summed up. So let me just kind of say these are the things we've talked about with China. When you think about China, you think, oh, China is a big country. It's a first world country. It's got all sorts of good things going on, but there's a lot of things not happening in China. I know a lot of people are leaving the United States right now, which we'll get into that story, but they are not going to China. I promise you that. And I can prove that because China right now is losing 60 million people. That's what's anticipated to disappear. 60 million people by 2035. They, back a while ago, had a one-child policy. And just so that anybody that's watching this knows, that is not a good policy when you have a growing economy in a growing country, because it created a demographic cliff. When they came out with that, obviously it's a lagging thing because, they said, hey, one child, that's it, because they had they have overpopulation. So they said, all right, you can only have one kid. Now that's got a major thing and they can't grow. They don't have they don't have the demographics to grow into the future. And I don't know how you ever fix that. I really don't. Robots. Yeah, I mean, maybe that's how they do it. Real estate in China has had 5 years of decline, 5 years of slump, 80 million unsold homes in China. Like, let that sink in. 80 million homes are unsold. You've heard about the ghost cities and everything else, but life savings have been wiped out for lots of their citizens, and 60 plus developers, real estate developers, gone, bankrupt, out, done, defaulted. Deflation. They've got 3 years, 3 years of falling prices. So they're not in an inflationary period or a stagflationary period. They are legitimately in a deflationary period where their prices are just going down. And that's the longest streak since China's transition to the market economy. So their pricing just keeps falling, which is not a good sign, just so you all know. And their debt. This is the one thing you'll never really have a pure, real picture because they're communists. They don't give you the real numbers. But the real fiscal deficit is closer to 9% of GDP. 10% of the entire national budget is spent on their Social Security gap. So those are the problems. So China needs to fix those problems. That's probably why China met. Steven, do you have anything to say on any of that?
Well, I mean, China's an interesting place. I mean, we look at time in the terms of decades and sometimes centuries. I mean, we've only been around for how many years as a country? 250 years is the celebration this year, obviously. China's been around for thousands and thousands and thousands of years, and they often play the long game. So sometimes when you see some of the stuff with their economy, they're not panicking. They don't freak out because they've been there. Maybe they have a grander plan on why they're doing what they're doing. So like you said, being they're communist and very non-transparent, it's hard to trust anything that you see or hear. I mean, and we go back and forth as a country. I feel like they're our biggest adversary. And then all of a sudden we're like trying to help them or, trying to get trade back. And it's like always this back and forth. Are they our enemy? Are they our friend? Having someone like Donald Trump over there, running the show, to me, is a good thing because he's a business guy. He understands the art of war. I mean, he's written these books and, he kind of understands their mindset. So I think we probably have the best person possible trying to figure stuff out with China right now. I mean, a lot of what we've done with Venezuela, with Ukraine, Russia, with what's going on in the Middle East, maybe indirectly was meant because of China. So there's a whole lot there, man. And it's a wild thing to kind of pay attention to here and there, though.
Yeah. Well,
some good comments too. Sorry, one more thing. Let me just add. Chris Ass said China's population is aging rapidly, which is very true. Mike said maybe have a child minimum policy. That's how to solve the not enough kids being born. And then Chris said China built a bunch of ghost cities where nobody lives, and I think that has to do with some of those real estate numbers that you mentioned. And then Craig said, I think with fractional investing with things like Robinhood, that many people think they own stocks and therefore think they are getting some of the stock market. Oh, that was to Jim's question, kind of outside of China, but yeah, good stuff.
Yeah. Well, here's what came about from that meeting. So before they went out, there was rumors that Trump said that he was going to get them to buy 500 Boeing jets. They basically committed to 200. That doesn't mean they're going to take delivery, but they committed to 200 Boeing jets. And the funny part was, is you would think, China ordering 200 jets from Boeing, that would drive Boeing's price up, right? Didn't. It drove it down. It went down 4%. And probably because the market isn't saying that the orders are good. The market's saying we want to see deliveries. So if the deliveries happen, I think then the market will respond and be favorable to Boeing. And the other thing, too, that happened out there is there was a promise of $17 billion a year in U.S. agricultural purchases through 2028. But the issue with that one is, from what I can gather, is that was already pre-done. That was already prearranged. Like that really wasn't something new that came about from the meetings, but we'll just chalk that one up as something good. Let's see, on the top, October 2025, the South Korea deal, 25 million metric tons of soybeans annually had already been committed. So that was kind of another one where it was already committed, but yet now we're retrading that. And the way that they're going to do that, and they can temporarily do this, is shift from Brazil to the U.S., whether that's important or not. Let's see. They did come up with a trade and investment council where they can discuss future tariff reductions, because the tariffs are kind of crazy right now. If anyone hasn't paid attention, the U.S. tariff on Chinese goods is 47.5%. That's up 3.1% from before Trump started. And then China's tariff on U.S. goods is 31.9, but that's up 8.4% since 2018. So that's where we sit on tariffs. So I think that will be a good thing, the Trade and Investment Council. And Xi Jinping, promised or said he was going to visit the U.S. in September. So we'll see what kind of red carpet stuff they can pull out. But I think a lot of the actual tactical, tangible things that could come about this might happen in September. At least that's what we can hope. Here are some things that did not happen. And sorry for NVIDIA, but they were hoping to get their wishes granted over there in China, but there was no movement on the NVIDIA chip export restrictions. Right now, there's a chip export restriction on NVIDIA, which is hurting them. There was no movement on AI technology transfer limits. There was no Taiwan resolution, which is kind of a big one. Actually, I think Xi Jinping said, don't fuck with China, or don't fuck with Taiwan. Is that maybe not in the exact words, but they said something like that, right, Stephen?
Something like that.
Like, stay out of Taiwan. And I don't know if Trump can do that or we can do that, but yeah, nonetheless, there was no resolution on that. There was no fentanyl enforcement mechanisms, and there was no structural tariff deal or anything that's kind of going to soften the tariffs, which would basically make things, more, I don't know, probably easier for all those companies to ship goods and not have the tariffs. Anyway, that's why Wall Street said there's nothing of substance that came about from this meeting. Stephen, you have been a little bit more optimistic on the China visit. I guess any visit to China is good, because I don't think the prior administration go to China at all?
It's pretty rare. I know George Bush went a few times. I think Obama was over there a couple times. Trump went in 2017.
Obama had really good relations with China.
Yeah, that was the last visit, was in 2017 with Trump.
But Biden never went over there, right? Or Kamala?
No, I don't think they had very good relations.
Yeah, I don't either. All right, so I guess that's a good thing. But anything else you think was good about this? I mean, I don't know. It just seems like the Boeing order, which, yeah, that'll be good when they take delivery of those aircrafts. The agricultural purchases, that deal was already made. The Trade Council, there's no solutions yet. I mean,
Well,
yeah.
If I had to guess, there was a lot that was accomplished and there's a lot that happened, but we'll never hear about it.
Yeah.
As bad as that is. I mean, there should be more transparency, but I believe there's backroom deals made that, we'll never hear about it until they happen. That's my best guess.
Maybe we'll hear about it in September when it actually takes shape. Anyone have any opinions on the China visit? I did not like the fact that he brought, all the big wigs from all those companies. I didn't fully understand that. I felt like that was maybe contrary to what he should have been focused on, but maybe not. I mean, he's a business guy. I get it. So he's trying to always get business going, and he's very pro stock market. I feel like Trump thinks if he can keep the stock market up, that's in the eye of the people, the citizens of the U.S. That's a good thing, and they will think that the economy is growing, that everything's on pace. And I don't really have an opinion on that. I don't know what to make of it. I don't think things are good at all. But I mean, that's because we've got front line and we're talking to people day in and day out. I mean, I'm not seeing things being really good at all. I see prices going up. I see people being pinched even more. I mean, grocery prices are the only thing that pisses me off is that all the blame gets put on Trump. Now, I'm not right now super happy with Trump, but that's just me. I wouldn't have voted differently. Certainly wouldn't have voted for Kamala, but I'm definitely not happy with what is shaping up with what Trump's doing. I still want to believe there's a plan, but I'm having a harder and harder time week over week believing there is a plan. It just, none of it seems to have any, it's just a bunch of threats that never materialize, that get kicked off. I mean, give me a break. Like TikTok. Weren't we supposed to ban TikTok? And nothing happened with TikTok unless I missed something. So it's just like threats. And it's kind of like the boy that cried wolf, right? Eventually people just stop listening. And I feel like I'm there, Stephen. I feel like I am just like looking at all the stuff that Trump says and just being like, another bluff. Nothing substantial is happening from his bluffs. One day we're going to bomb the shit out of Iran because they haven't signed the trade deal. The next day we're deferring that and pushing that back. So it's just like eventually, the other countries or the other people looking from the outside in are just going to be like, doesn't matter what he says. He's not going to actually do anything about it. What's your take on that? I mean, that's just where I'm seeing it. Oh, I did not know there was a deal between Oracle and TikTok. Interesting. Do you have anything to say on that?
I mean, no, we can keep going with the economy.
All right.
Into what Trump's done and hasn't done right now.
Well, I mean, yeah, Wall Street just said there's nothing of substance. There's nothing of substance happening. Now, this is an interesting thing, though. In that meeting, China had basically said, can China and U.S. overcome, and I'm not going to pronounce this right, but the THUCYDIDES trap. But when you look at that, what that is it's a theory that when rising powers are challenged or there's challenges with them, an established one, 12 out of 16 of those historical cases ended in war. And I guess it was said that, I don't know.
I guess what was the expectation of this visit? Was it?
I don't know.
Were you expecting?
I don't know if there was an expectation. I mean, they were going to buy 500 airplanes.
I don't really get the whole debate right now or the whole conversation. So
I don't know. I mean, I don't know if is a debate. It's.
I'm sure James had something negative to say, and he's not here to say it. So I don't know where this
he definitely did. And here's what they are. He said Trump made between 220 million and 750 million security trades in Q1 2026, including NVIDIA, purchased 1 week. See, these are just things, and I'm just skipping over them. He's trying to jump on. He's out back, but they're probably having computer issues because I didn't bring my laptop. But we can move on to the next thing and get past I just think that was just kind of, I don't know what came of it. I want to believe, like you said, there was a lot of stuff done behind closed doors that we're not hearing about, which is always the case. But this one's pretty front and center. So let's move on past that. I don't think anyone has anything else or anyone wants to hear about that. Didn't TikTok U.S. assets get sold to American interest? Yeah, that's what James was saying. Oracle bought them. I don't know. We need to fact check that. Let's see. All right, let's move on to treasuries. This is one you really can't ignore. And, sitting where I sit and understanding what it means when treasury yields, specifically the 30-year and the 10-year, start to climb and get elevated. And right now, just so you know where they're at, the U.S. 30-year treasury, okay, the yield on that is over 5%, which, dude, I don't remember the last time I saw over 5% on that. And the 10-year is at 4.53. The good news is we're not inverted anymore. Okay. So we're normalized there. But the bad news is the prices of these bonds keep falling, which, I'm a huge treasury guy. I own lots of them. I'm not making recommendations, but as they go down in price, I just buy more because I know eventually they're going to have to drop interest rates. And when they drop interest rates, and if we get some faith restored, from the Iran war and lots of other things and just the uncertainties, I think you'll see these yields calm down, which will get the prices going back up, which will be great because when yields go up, here's what everything finance, let's just keep it that way, is tied to yield. Usually shorter term yields are tied to shorter term things. And, but if you really look at mortgage rates, they're going to definitely be heavily tied to the 10 and the 30-year yield. So if the yields on bonds are going up, guess what else is going up? Mortgage rates, car loan rates, business borrowing, credit card rates, they're all priced off of treasury yields. And they always have been that. So when you hear of yields going up, just know that costs for financing are going up. I mean, all the more reason to be your own banker because the insurance companies' loan interest rates are not tied to treasury yields. They're more tied to the LIBOR bond rates, which is more corporate rates, okay, or corporate bonds. But when you're really, really, and hopefully I'm not misspeaking on that, when you're really thinking about the importance of this, I can't think of a better time right now to be your own bank. Not trying to make this about a commercial, but I mean, doesn't that just make sense that if you were your own bank, if you took back the banking functions in your life, if your cost to borrow from your private banking system was less than theirs, that would definitely save you money. But if then you paid back the money at the rates that they would charge you, you make a spread. You do what banks do every single day, and you are the one getting ahead, not the banks. So I don't know. I can't see a more advantageous time than right now to do that.
Yeah.
And
I mean, along with your money's guaranteed to grow within there. I mean, during these uncertain times, and then whenever the time's right, just like Warren Buffett's doing, stockpiling cash, you deploy that cash that's been sitting there growing for you, guaranteed. I mean, it just in times like this, it really does make all the sense in the world. And I mean, to your point with the federal chair, I mean, so Kevin Warsh, the new Federal Reserve chair, was sworn in just this last week, right? On was it Monday or Friday?
Yeah, I can't remember if we were in Puerto Rico, so I think it might have been Friday.
Must have been Friday, yeah. But I mean, during his confirmation hearing, I mean, he came out and he's talking about, the Fed's balance sheet currently sitting at $6.7 trillion. I mean, just to put that in context, Chris, before the 2008 financial collapse, it was under $1 trillion. So we've really vamped things up the last 18, 20 years. I mean, to a 700% increase. I mean, so he spent over a decade arguing that the Fed got too big. He told senators at the confirmation hearing that he wants to unwind the balance and pay it down. So we're looking at, seeing a steady, consistent shrinkage over the next 4 years, presumably slow and steady, but potentially more aggressive than under Powell. And basically just saying the implication there could be, of less Fed support for long-term bond prices. So, showing maybe higher long-term yields than we'd otherwise see. So kind of interesting to see how it all ties together,
I agree. And so I want to hit Chris Ash's, and then we did have Mr. St. James finally get in. Sorry, I didn't bring my laptop. I got to do some lives at home the next couple of days. So
Sounds good. Great to see everybody.
I know you're using the clam back there.
Great computer.
Yeah. The computer that, if any of you saw that YouTube video, I did some motion with my hands, like the Bruce Lee thing for the subscribe now. And I hit the laptop and it fell and it shattered the screen. So yeah, that was an expensive YouTube video.
Hey, real fast before we jump forward, let me just clear up the TikTok. So U.S. ownership structure of TikTok U.S. It's made up by 19.9% minority stake, which is the maximum allowed under the federal divestment law. That's ByteDance, which was the parent company. So they retain 19.9%. And then the rest of it's basically made up of a consortium of American international investors through a newly formed entity called TikTok USDS Joint Venture LLC, of which Oracle Corporation holds a 15% stake, Silver Lake 15%, MGX 15%, and then the other 35% is made up of other investors, such as Michael Dell Family Office, Susquehanna International Group, General Atlantic, and Alpha Wave Partners. So just anybody wondering on that.
Nice. One thing I did want to hit is before James kicks in, we can kick off, we're on the government bond sell-off, but there's a lot more I want to hit on with that. But Chris Ash said, let's see, something about insurance companies would like treasury yields higher. That depends. So on one level, yes, because they're making a higher yield, and treasury bonds are definitely, something that insurance companies gobble up, but corporate bonds, AAA rated or really high quality corporate bonds are also something a lot of the insurance companies own a ton of. So yeah, the yields going up certainly is good for the long-term tailwind of the insurance companies, as long as they buy them properly, which they have been. But here's another thing that is really, really, sorry, I'm overcoming this little thing. And just uncontrollably, I just have to cough. But here's a really good thing. So there are two different ways you can move money, and this isn't a commercial. This is fact. You can put money into risk assets like the stock market, and you can ride this crazy roller coaster ride. Where are we at today? I mean, yesterday the markets were down. Today we're up a little on the futures. It's just legitimately just a crazy roller coaster ride, and it will continue to be, and it'll probably deteriorate. So that would be risk on assets, where you're taking risk to try to make a return. If you average it out, depending on what period of time, you're going to find anywhere between 7 and 10% is about what you're going to get with risk assets. But you got to have the cojones, and you got to have the risk appetite to take that on, because there's just risk. Here's a unique thing with the treasury yields being elevated. And I'll just give you one of the numbers. And we're going to be talking about this today on Wealth Webinar. We're going to be showing this because this is just so you all know what I'm going to tell you next. This is not going to last. This is kind of like one of those things, you in the future, you'll sit there and say, I shoulda, I coulda, I woulda, but hopefully you don't wait and join us for Wealth Webinar at 1 p.m. Eastern by going to chrisnaugle.com to register. But here are some of the rates. These are guaranteed rates. These are fixed products, okay? Meaning there is no market risk, none, zero. And here are the rates for somebody that has $100,000 or more to put into one of these accounts. And I can't say invest because there's no risk. So if you wanted to make if you had 100 grand in your retirement account, 100 grand in the bank, and you just wanted a higher interest rate, and you were like, I can't qualify for one of those policies, or I can't do that. You're just looking for guarantees on your money. For 3 years right now, you can get 5.6% guaranteed. For 5 years, you can get 6.3% guaranteed, meaning for a period of 5 years, you lock in 6.3% tax deferred growth in bypasses probate. And then for a 7-year guaranteed rate, you can get 6.5%. Stephen, when is the last time I've even talked anywhere even close to these? Normally it's like half. Where people are putting money in CDs, getting, 2 to 3%. Here, you can get 5.6 to 6.5%, depending on the duration. I mean, these are the good things that come out of elevated yields. Although short in time, where this will be an option, but that's crazy. Like, think about that. For 7 years, you could guarantee yourself 6.5%. Lock, stock, and barrel. The whole stock market could crash, and it probably will. And you're going to just sit there and you'll be like, I'm making 6.5%. I don't know about you. Yeah. Now the downside is you got to have 100 grand. Okay. Cause that's just where that one starts. If you go under 100 grand, you're going to be in the 4 to 5% range. Anyway, that's all I wanted to say about that. So those are the positives. And I did, unfortunately, wow, that was weird. My computer just went to a blue screen. Frightening. Anyway, let's continue on with the bond sell-off. So the Iran wars got oil, prices elevated. You got the wholesale inflation is on the rise, fastest pace since 2022. You got Japan and China both reducing the amount of treasuries they're buying because of the risk just, is higher when yields are higher. And you got the summit, not producing much out there. So what is your take on this? No one's got
James. I mean,
wow.
No, I mean,
let's move on.
James a chance there. But, like you said, Chris, I mean, we haven't seen it before. I mean, we've I was talking about this last night. So we have a 3-day, what we call the BYOB Blueprint virtual 3-day training event. It's coming up next weekend, Thursday, Friday, and Saturday. So I was doing a preview last night, a 60-minute kind of training on what we're going to be going over for the weekend and who it's right for. But we got into a little bit about real estate and just how you could basically put a picture, a wall full of pictures with real estate deals on it from, 2011, 2012 through 2024, throw a dart at that wall and whatever deal it hit, you can make a bunch of money on it. Like everybody was making all this money on all kinds of real estate. In the last 18, 24 months, that's changed significantly. And the market's been completely changed. The type of deals are completely changed. They become a lot difficulter. People have lost money. Deals have gone bad at a huge rate. And so I just know that people are kind of, looking at things like these 6%, 7% potential guaranteed returns right now. And they're like, man, like it's just going to keep getting worse. Everything's at all-time highs. We're going to see a pullback. We're going to see. So I got to imagine people are flooding into this right now, Chris. I mean, like you said, we haven't talked about rates like this. I don't even know when, if ever. I mean, it's pretty crazy to see. So it's an amazing thing. And we're going to talk a lot about it on that training next weekend. So if you want to learn more and really get in depth on this stuff, the 3-day we have coming up next weekend, Thursday, Friday, Saturday, it is designed to start with, okay, you guys teach so many different strategies, but where do I start? And so we start Thursday morning and we go right through the 3 days. It's kind of progressive. So as we go through the 3 days, it builds up the strategies. It builds up how you're moving your money, what that looks like, these different opportunities. And we're going to talk a lot about very conservative stuff on this one and guaranteed stuff on this one. Why? Because that's the market we're in right now, Chris. I mean, you see everybody talking about it. Warren Buffett, Ray Dalio, all the big names are out there talking about it right now, that the markets are just like gambling. They're calling it gambling right now, like they've never seen before. And so we're going to talk a lot about that. And by the way, Chris, we talked about the wealth webinar earlier at 1 p.m. Eastern today, where we're going to get into some of these annuities and things like that, these guarantees. So you can learn a little bit more about it at 1 p.m. today too. But if anybody's interested in attending the 3-day class next weekend with us, buy a ticket right now, because at 1 p.m. we're going to do a drawing and we're going to give away one of these customers. We're going to give away 2 custom skateboards. So at the end of Wealth Webinar, anybody that's bought a ticket before Wealth Webinar is going to be in the drawing for one of these skateboards. And so here's a little picture. Dexter sent me this. Sure. Is this them, Chris? Is this the same one or different?
Yeah, that's the one.
That's it. Okay, cool. Perfect. So we're going to give away 2 of those today at Wealth Webinar to whoever has purchased a ticket prior to the Wealth Webinar today. So make sure you get your ticket right now. It's beyourownbank.com/3-day. So Roman numeral 3 and then DAY. And I'll put the link over in the chat box.
Love it. All right. Well, James was just modeling the new skateboard. It looks nice with his muscle shirt he's got going on there. I love those. I wear those all the time like that. So, when I'm feeling like really dressing up for a special occasion, I put one of those on. But it is actually warm here. And I think that's the biggest takeaway you can get from what James is wearing is we finally got a little bit of a warm snap until today. Now it's like 50 again, but it was like 8. Steven, you don't even think this exists here, but it was like 86 degrees.
It was crazy.
On Sunday. Yeah. Yep. Or I'm sorry, Monday was the hot
Any
one.
Humidity?
No. Yes. No, tremendous.
That's not real 86 then. Come on.
It was humid as hell. All right. Well, let's do this. Let's move on to the next one. We'll talk a little bit about what's happening on USA soil.
My fellow Americans.
I mean, this one shouldn't come as any surprise to anybody, especially if any of you are real estate investors, private lenders, or anything. I mean, there are just way more sellers than there are buyers right now. The real estate market is literally in a deep freeze. And we have been seeing this, for a while, but we saw it before the news actually started talking about it, but now the news is out. 1.482 million active sellers as of right now, and 1.011 million active buyers. So that would basically put the outpacing of buyers to sellers at 46.5%. Now, if you're looking to buy a property, you probably got some leverage, right? It's a buyer's market. You can negotiate price and probably start to do that. You're not seeing the multi-offer, scenarios. Very not in many places in the U.S. are you seeing that happen. It's definitely a rate lock trap right now, because until rates move, until we kind of get some relief, I don't see anything changing here. I just feel like it's going to get worse and worse. Any opinions from you guys?
Absolutely. I mean, this is kind of what ties into what we were talking about with Jay Powell and what's going on with the Fed. The idea was to keep interest rates higher so that it kept from home prices from going much higher than on top of that. Because when you lower interest rates, what happens is that home prices, home prices technically go up. So by keeping interest rates a little bit higher, what happens is people who are hoarding cash right now earn a little bit more money, and it helps reduce the price of home prices as well. And you know what they say, you buy the house, but you date the rate. So now that we're seeing that people are not looking to necessarily buy homes at these exorbitant prices that we experienced over through COVID, now we're seeing a little bit of an equilibrium. And if anybody who's studied economics knows, home prices ebb and flow. We're seeing part of a natural cycle. It isn't time yet to say, oh my gosh, it's a real estate crash. No, it's a correction. It's an adjustment. People are selling their homes. And what happens when you have more sellers on the market than buyers is you see reduced prices. And as time progresses, some people are going to be picking up these homes at more market adjusted rates. This is all part of capitalism. And they're going to be able to get these homes even if they're at higher rates. And then later on, when rates do adjust, they'll be able to refinance and have an even more affordable home payment. So this is just the great equalization of everything. You can give credit to whoever you want to, but this is just the results of an economic cycle. And I think that this is actually a decent thing, but I'm seeing personally in my own neighborhoods that there's a lot of homes on the market, a lot. And unless this home has like some very, very unique features, these homes are sitting for quite longer than most realtors really want. And my realtor friends are saying, like, look, this is a good time to buy because homes are on sale. If you look at the long term, a 10-year or 20-year trend, you're going to make money and you're going to be glad that you purchased at these lower rates, at these lower prices.
Yeah, Stephen, your neck of the woods, maybe not all parts of Florida, but Florida's getting pretty well hammered, isn't it? Aren't your prices going down pretty significantly there?
I don't see it where I am, but
yeah, if you look at the macro for Florida, what happened is they saw the tremendous flooding of people coming into Florida over COVID. So builders were like, oh my gosh, how are we going to handle all of this demand? But of course, the people who had these housing starts in 2022 and 2023, now that these homes are actually available, well, people aren't migrating to Florida in those massive numbers like they were before. Plus, a lot of people are leaving Florida as well. I'm still saying that it has a very stable population, but we are seeing high numbers of foreclosures. We're seeing high numbers of vacancy. We're seeing high numbers of people just saying, reduced numbers in terms of how much migration is going into Florida. And that's what's going on. If you guys want to fact check that, by all means. But this is just the state and conditions of at least the state of Florida. And of course, like, hey, California, a lot of homes on the market, extremely expensive. People migrated from California to go to all these other zones, Austin, Idaho, Texas. But now they're seeing the realities of all these other zones that they go to. Well, Texas, yeah, you're going to be able to get your land for cheap, but good luck with those taxes and HOA. Good luck moving to Florida, but you got to pay high insurance costs. And as somebody who took the time to study all of these particular opportunities, you're going to pay one way or another. That's the long and the thick and the thin of it. You're going to pay some way. And it's important for people to do their total research and say, what is my total cost of living in this area before you move?
Well, we just talked about that. So Chris and I were in Puerto Rico this last week, and we were talking about, Puerto Rico's a pretty infamous destination for people to leave the U.S. and live there for at least 6 months to take advantage of their tax laws. I mean, they have, what is it, Chris, 0% income tax if you qualify. And
and forced income, yes.
And so, but then people don't realize, like, once you're there, like, everything costs more. Obviously it's kind of a crummy place. I mean, no offense, but there's really run down areas. Like, it's rolling blackouts. They have a lot of electricity problems, and it's very expensive. And so, like you're saying, James, it's like you give up what, you're not paying as much in tax, but what are you really gaining in quality of life and everything? To me, like, where you live, like where you make your home and build your family, to me, the cost should almost be irrelevant. Like, do what makes you happy and figure out a way to do that, because at the end of the day, that the happiness factor is going to far outweigh property taxes or insurance or any of this other nonsense we kind of microly talk about. To me, that's more important. I've had the opportunity to travel the entire country. I've been to 47 states. I've spent time in many, many different cities, and I've lived in 5 different states, 8 different areas of those states. And so I've really found it where I live now. It's home. Like, it feels like home. Is it expensive? Yes. Is it, could I get a much bigger house from somewhere else in the country? Absolutely. But this is perfect for me and my family. So to me, that's what's important.
Yeah, I think you're right. Definitely.
Yeah, absolutely.
Well, that goes into everything. Sorry, it goes into everything we talk about. And like, even with the 3-day training I mentioned, I mean, the entire point of everything we teach guys is to live a better life. Like, life's so short. Like, get out there and enjoy it. Like, bring the emotion into it. Like, enjoy it and make yourself happy. And if you're not right now, make a change. And that's what a lot of the coolest thing, Chris, of what we do at James is when we talk with these clients, so many people are like right on the verge of having so much more happiness in their lives if they just were taught like one thing differently or like did one thing differently. And this isn't just hyperbole, like you were saying earlier, Chris. Like, this is legit. And we watch these people that make these small little minute. I'm not saying quit your job and start some new company or anything. Like, make one little small change, and over time it compounds into such a difference. Like, it's so cool to see. So we've been doing this now for what, 6 years now, 7 years now. It's really cool to see, man. It really is. Anyways,
it is. I'll certainly tell you, we did 3 videos, lowdown videos, when we were in PR. 1, explaining the tax incentives, 2, explaining the negatives, and then 3, why there's the tax incentives. And I will tell you this, I mean, either we struck and tapped into an algorithm that goes directly to Puerto Rican citizens, but the Puerto Rico citizens do not want Americans there. It's brutal. If you get a chance, go on Facebook or Instagram and look at some of the comments on my posts that I put up out there. Man, brutal. So, like,
well, let's explain why then, if you're going to bring that up. Why is it that so many Puerto Ricans wouldn't want gringos and say, gringo, go home?
I mean, it's pretty obvious. It's gentrification. I see it firsthand. Places like Dorado, you see gentrification 100%. It drives price up for all the citizens, and tax treatments are, if I'm not mistaken, different for the citizens and the gringos, if you will.
I mean, yeah, you're seeing basically a privileged class coming in and taking over your island, saying it's theirs.
I get it. I'm not disagreeing with them. I'm just saying this is
just for general education, of course. And one thing that a lot of people don't know about Puerto Rico is that the United States basically keeps it as a profit center. They don't have to. There's no representation for Puerto Rico in the U.S. House or Senate, which is why it's never been a state. Which is one part of it not being a state. But every single good that they have has to be imported to the United States first, and then marked up and then sent over to Puerto Rico, which is why you see
on U.S. ships with U.S. sailors, which is more expensive.
Which is extremely expensive, and basically they're putting out is Bacardi rum.
When you talk to the locals, though, it's huge. Like, they don't all agree with it. Like half of them want to become a state, half of them want to break off and just become an independent country, and the other half, that my math is right there. The other half want to remain like it is and keep going. So it's an interesting conversation when you actually talk to the people that live there, and it's crazy to see that divide,
Absolutely.
Yeah, I mean, tourism is a big thing there. But there's another thing about tourism is, this first time that the net negative migration is taking place. First time in 90 years that there are more people leaving the United States than there are people coming in. Now, there's different factors. I mean, like the immigration enforcement, that was an 80% decline in net migration versus historical averages. But this is the big one, the American citizen exodus. 180,000 U.S. citizens permanently moved abroad. Portugal, Spain, Netherlands, Germany, Ireland were some of the biggest places that they went. That's 180,000 people. And if you did the math on that, the economic hit is $60 to $110 billion on those people leaving. And the interesting thing is it's like we constantly say this is the nicest house in the shitty neighborhood, but yet I think with the political divide, there's a lot of factors to this, but there's just, the safety. There's a lot of people that don't feel safe anymore in cities, and cities are different. I don't live in the city and I stay out of the city as often as possible. But safety, political climate, and just pure out cost to live in the US. So a lot of people are just saying, done with this. I'm out. I think it's like 1 in 5 Americans, I think was the statistic they came up with. 1 in 5 Americans, if they could, would leave America immediately. Now, 40% of them are women, between 15 and 44, which definitely says a little something about that generation.
That's multiple generations right there.
About those
1 in 5
generations.
people said they leave the country if they could. Where are you getting this from?
Yeah.
Where are you getting this
They
from?
said that,
We can pull that up.
That's an insane statistic.
yeah, it is. This was interesting. We ran over this.
Probably the
with
same polling people that said Kamala was going to win the election, right?
Probably.
Oh my gosh, here we go.
But this is interesting. Gen Z homeowners outnumber millennials at the same age. So that was an interesting thing that I pulled up. There's more Gen Z homeowners than millennial of the same age.
Right. So let's take this apart. Why are people leaving the United States, which I think is a pretty big issue? Because I mean, if we're the nicest house on a messed up block, I mean, what does that actually say? Number one, like you look at a country like Portugal, which
hold on.
own,
So many people, 180,000 out of 350 million people is not that.
Yeah, it's not that many, but it's just the most in 90 years.
Yeah, that's enough people. Steve, this is a drawstring from other big things here. The United States needs people. The United States needs people really bad, just like China, which is the story you guys led with, needs people. There is a population crunch right now globally, and we're going to actually talk about that in our next story as well.
AI, though, according to AI, like we're not going to need people.
Stephen, so fiscally,
which way we going here? Come on, pick a lane.
Yeah. So in terms of capital, in terms of human capital, in terms of capitalism, in terms of having consumers, in terms of us having businesses, the most developed countries with people will win because it'll follow innovation. What follows is economic influence. So if you have a mass exodus of Generation Z, if you have and they're going to be bringing in Generation Alpha, if you have millennials saying, look, I'm out of here, what does that actually do for the tax base of those countries? Now you're saying, well, we've got, 350 million, 180,000 are leaving. That's no big deal. But is this a precursor to something bigger? Is this a reflection of where we are in terms of a country? We already are exploring that birth rates are down. That's going to be our next story. We can go ahead and tie that in there. Okay. Birth rates have been going down significantly since 1990. So we've got all of these things coming together with an advent of AI. And what does that mean fiscally for people who are looking to start businesses, who are looking to start with homes? We're looking at more home vacancy rates then, if that's the case. So if you're an entrepreneur and you're thinking long term, like a lot of these other countries have done and weathered, you're like, okay, let me see here. The Americans need a 2.6 birth rate in order for their economy to be sustainable. How can we maintain that? Because right now that's not being maintained because of fears of war, because of housing, just general cost of everything. And of course, this whole fear of war and everything else that's going on right now. So if I was if it's not an economist, a politician, these are the principal things I would be addressing and be like, look, if we're going to be Americans first, we're going to be, all about America. Here's the things that I'm going to promise to help keep our human capital here. Because right now it's going to other nations and we're educating the rest of the world's top tier individuals.
I guarantee you the people that are leaving are brainwashed idiots that we're not going to have families anyways, that are not providing.
No, Nagy, stop.
The country anyways.
No, stop. Stop. Don't. This is not in your social circle. Steve, stop. Like, do you have your tongue in your butt? Because you're talking out your ass.
By statistics, Republicans are far more to have higher fertility rates and birth rates than Democrats. It's just statistically speaking. I mean, when you think about why the birth rate's down, the nuclear family's been completely killed off and people no longer stay married. People are no longer getting married. We've been brainwashed to have the career, have the job, don't have families.
Because it's that expensive to live in America.
Hard to figure
You're
out.
not being irresponsible. What are you talking about? It doesn't make sense to have kids if you can't even afford a house.
People
what are you talking about?
I've always will.
But like, connect the dots. If it's irresponsible for you to have multiple kids, every social safety net is being eliminated. All right, then why would I want to go out there and have kids?
I don't know. That's not a true statement. Every social that is not a true statement.
Yeah.
Okay.
I mean, what's now we got to, I mean, a lot of people come on this just to hear the argument. So
you're talking,
when you
so
say
if you look up right now, Chris, what's happening with the food stamp, SNAP, and other programs? Those haven't been cut.
Yeah, but they've been abused for how long, James?
But they still serve a contingency, sir.
They certainly do. My mother was on food stamps and might even still be, but like that isn't the point. The point of the matter is like how long were these social security nets abused? Like how long?
Anytime you have okay.
I know it's hard to unwind a social, when someone gets something for free, it's hard to take that back. It's hard to reduce that because people get used to that in families and people that very much need that. I'm not saying that there aren't people that need that. I grew up in one of those families. Let me make mention. Like my mother was on every assistant. We used food stamps. It was an embarrassing thing for my mom, like keep and all those like I'm not playing from the other side of the aisle. Like, oh, this but they were abused.
They were abused. But let's also look at this then. What federal program, what state program, any particular government style program is going to be abused? It's about minimizing the amount of abuse that happens in these systems as much as reasonably possible.
We haven't done a very fucking good job of that, have we?
Well, I mean, imagine this. I mean, looking in terms of a social safety net, imagine going to government and saying, yeah, we need $400 billion to build a ballroom. Okay. That's cutting out that's abuse.
It is.
We're doing
right.
abuse
Happens at every single level of government. Is what I'm connotating.
It is nonsense because now you're just pigeonholing one thing with Trump. It's just like take presidents out of it. Just talk about social safety nets.
Yes,
like,
but
you
here we go. You're saying that 133,000 people are leaving the United States out of the 300 million that live here. So it's infinitesimally small. What is the rate of failure? What is the rate of abuse that's happening within these particular social programs versus the entire prospectus over the entire thing? That's what we're saying. If all we do is we look at this, hey, all I see is this corruption, this person's taking advantage of it. What about all the 11 other people on the other side who absolutely need this and are trying to get off?
I agree.
Do you see what I'm saying? But if all we do is focus on this one negative, we're not going anywhere. You people are
abusing it and you people are legit. Like, how do you do that? Like, well, I mean, maybe AI will be able to help kind of pinpoint that with data. I mean, hopefully that's one of the good things that they do with AI instead of building robots to fight wars.
Mm-hmm.
I mean,
I'm saying is that the good far outweighs the bad.
I think we can chalk it up with the fact that it is a problem. There is massive amounts of fraud. There is massive amounts. There always has been.
Exactly.
Politics is just dirty fucking business.
Right.
But it just seems like that's all we focus on now is politics because of Trump and because of there's so much hatred for Trump out there. And it's kind of funny. Like there was a lot of hatred for Biden, but you didn't hear about it. Like you guys
complained about it all the time.
What?
You guys hated Biden.
We did. I'm talking about the media.
Biden.
I'm talking about the media.
Made fun of him. It was pretty easy to do.
Everybody made fun of him. We made fun of him. People on the left made fun of him all the time. But
Can
it
we
was
get a
under
fact
that
check? Is he
microscope
still alive?
because so many people were woken up to what was going on with the government after Trump's first presidency. So they were paying attention to Biden a lot more. He was under a much heavier microscope. So, I mean, that's one of the good things that came out of the first Trump administration. People started paying attention a hell of a lot more. So I think subsequent, unless we get some super, super boring president, this type of political awareness is going to keep going on for at least 2 more generations. But yeah, getting back to why would people leave America? It's not just people who don't want to have families. People do want to have families. They just want to be able to raise them in a decent society. They want to be able to raise them in a society where it's not going to be as racially charged or it's going to be as fiscally uneven. That's what I'm hearing from the people who are actually leaving right now.
It's a delicate situation. It's just, I will say this. When you give someone something for free, you are not helping them. You are hurting them. And when they become reliant on a government giving them something for free, you are absolutely destroying that person. This country was not built on handouts. It wasn't. No country was ever built on handouts. But we have become a country of handouts because of all these pork bellies and the fraud, whatever you want to call it. You can call it whatever you will. But we have literally gotten to a point where now when people have something taken from them, they rebel heavily. And I get it. But a lot of the people, not all, a lot of the people could do a lot better. I mean, listen, like somebody had mentioned the 4-hour work week. Like everybody wants to work the 4-hour work week, but these companies, you know, when you see the wealthy and you look at the companies and you look at those fuckers didn't work 4-hour work weeks. Those people didn't sit there for handouts. They kicked and clawed and screamed and fought and went through the trenches and went through the ups and the downs, the highs, the lows to get where they are. Like, you can't say that about most people. When people are given things and just handed things for free, you are not helping them. You are destroying that family lineage because you are taking away the importance of hard work, the importance of going out and the struggle, if you will, and understanding what that is, because they just become reliant. And reliance on government is never a good thing. I will go to the grave on that one. You know, I get it. Some social safety net is required. Okay. It just is. Like, there are people who are disabled. There are people, you know, the vets and the different people who deserve like some level of assistance, but it's just gotten abused. It's just gotten out of hand. And right now, I don't mean to pick on liberals, James, but like that is the loudest voice for free. Give me everything for free.
Negative. So let's look at this
that
right now. What the poorest states in the United States, the poorest states in the U.S., Mississippi, Alabama, okay, Louisiana, predominantly rely on social assistance by an overwhelming number. So these people, you're saying that it's just the liberals in those states are complaining?
I'm not saying that. I'm just saying they're the loudest. I'm not. See how you spun that? That was really crafty.
You said, but you said it's the liberals, and what
I said they're the loudest. I said they're the ones you hear the most from. I didn't blame the liberals. Like it's everybody out there, but I just said they're the loudest. That's why people tend to think that, because they're the loudest. That's what you hear the most from. You don't hear from the other side all that often. I don't know if that's media. And listen, like so much of this divide is just media. It is. It's just media. But like it's hard to not see it, James. The voice is very loud, and
because if they don't stand up for themselves, then who will?
That's a good point. I'm not taking anything from them.
Okay, the point that we diverge in ideology is that the foundation of social assistance should be there. And I think that there should be a way to help these people off, but a lot of people will be too rich for social assistance, but too poor for lower middle class life. And that's where the issue comes in at.
Yeah, the middle class is being squeezed right now.
Exactly. So imagine you finally get into the quote unquote middle class rung. You are working poor. You're making 20 plus some odd dollars an hour.
Hard to make it at that.
Children. Good luck.
Yeah,
you work.
It's almost impossible.
Overtime.
In a city, it's impossible.
It's impossible. So what does that actually mean? Are you trying to be on social assistance? No, you want to work. Many of these people want to work. And I agree that you have to develop your own skills independently so that now you can be at true middle class. But now try doing that with a family.
It's harder than ever. And the middle class is just a
And
dying thing. It's becoming like so many other countries. It's not what
Exactly.
it was in the 50s, 60s, 70s, where there was a robust middle class. Like, you hear it all the time. Like, I just read an article, like a teacher or somebody working at a factory could support a whole family.
Yeah.
Like, they could support a whole family. They could support 3 kids. You can't do that anymore.
Exactly. I have family members who are like, yeah, I'd be a teacher, but there's no way I can afford it. Like, it doesn't make sense.
I completely agree with what the middle class is very quickly evaporating. It's being squeezed out. It's being priced out. It's literally near impossible. You've got the lower class and the upper class. In the middle class, I mean, well, we all grew up, everybody on here, for the most part, has grown up with a strong, robust middle class, but it's just being squeezed right now. I don't know if it'll ever come back. I sure hope so, because that's what America's built on, is the middle class. But you just can't help to think that, more and more welfare is not the answer. More and more handouts is not the answers. And Buddha 389 said the biggest welfare recipients are corporations. And there is some truth to that. There's a lot of subsidies for large corporations that do not need help. There's no question about that. But again, it just goes right into the whole thing. There's tons of fraud. Here's the thing is, none of us can do anything about it. Like, there's not a damn thing you can do that will change any of that outside of you need to go out and be more productive. You want to change the circumstances, go out and be more productive. Go out and
go out there and vote for the representatives who represent your
doesn't
cause.
seem to help anything.
Right. I mean, I'm not sure if you guys
I'm sure voting for Kamala would have changed the United States of America, right?
There's been a number of political parties out there that have actually tried to champion.
Voting for Kamala and Kamala winning would have changed everything. Everything would be hunky dory.
Voting for Bernie or even Ross Perot would have fixed a lot of stuff.
Yeah, I liked Ross Perot.
Okay, so that's my statement.
Bernie, the old Tommy.
Whack job.
Bernie's a wacko, dude.
He's a whack. He's that man should
Why?
never.
Because he wants health care for everybody. What's the number one cause of bankruptcy in the United States?
Who cares? That would be great. That would be great. Like, that's a major problem here. Like, we just got our health insurance renewals. Like, they went up like 20-some%.
But you guys just called him a commie, though.
I don't what?
Could you repeat that, Steve? What did you call Bernie?
Bernie is a commie. He's a commie.
And he wants public health care. Is that correct?
Well, you're
Bernie's just a whack job. Can we just leave it at that? Commie, no commie. Like, who cares? He's a whack job. But the point I said is nothing would be better if Kamala was under. Arguably, we don't know, and it doesn't matter because Donald Trump is president. He's got another 3 years and counting, left. And if he loses midterms, I think we all know, if it switches, they'll impeach him. No ifs, ands, or buts about that one. I'm sure that'll be the next big thing that we're focused on. It's just politics as a whole are just a complete and utter waste of time shit show. So when you say vote for the right representatives, fuck, dude, that ship has sailed. I don't believe voting is going to change anything anymore. I think
I absolutely do. Otherwise, I wouldn't see Trump trying to gerrymander so many districts to push
it'll make a change in Los Angeles with Spencer Pratt out there. You've been following that? That's pretty wild.
So yeah, I don't believe in that level of cynicism at all, Chris. Not one bit. Because if that's the case, then that's exactly every reason why you want to leave the United States.
Yeah, I think there's probably some truth to what you're saying there. I don't know. I loosely, deep down, don't feel my vote makes a difference, but to me, it makes a difference. So I will continue to vote.
I'd like to actually bring up a point about that, Chris. And it speaks to your point. They were talking, meaning the internets and several media sources, were saying that in certain states have historically always been blue or red. They've just pretty much stuck to their guns. So your vote, hypothetically, only matters in these swing states: Ohio, Michigan, Florida. Right. At one point,
my wife talks about that all the time.
It's like, so I could understand the level of frustration that you feel, and that's why they're saying, basically, get rid of the electoral college, get rid of a lot of these systems, because our actual voting system is outdated. I haven't done enough research personally to really, say that's a plus or a minus, but the points that were brought up with some of these factoids does make sense. You know, people should feel that a level of incentive to say, yeah, my vote does matter. And where it matters the most is actually in your local elections. So if you want to have a starting point, you start at your local elections, and you get involved with where where you can actually affect change. Now, obviously, I'm not looking to move to Ohio anytime soon. I'm a big fan of Lake Ontario, but for those people who are in these swing districts, in these swing areas, in purple regions, North Carolina, some parts of Arizona, not a lot, that's where your vote actually matters the most. So it's something very.
I gotta, because we're at the end, I gotta hit some of these comments. They're too good.
Absolutely.
Craig Parsons said, that's the problem, James. The politicians will never solve the problem. People need to take care of themselves. There's so much truth in that. The politicians won't solve anyone's problems. Voting your problems away isn't going to be the way to go. I love Buddha's comment. The middle class was an experiment. The experiment is over. We're going back to the Victorian era of the haves and the have-nots. Sure does seem that way, doesn't it? Actually, I don't even know if it seems that way. I think it is that way.
It is that way.
It's not about productivity. You will own nothing and be happy. I can't disagree with some of that. This one here from Lynn, this is absolutely, and this goes against everything you just said about healthcare. And I agree. There is no free healthcare. Okay. Like there can be free healthcare, but someone's got to hold the bag. Somebody's got to pay for it. And, you know, like Obama with Obamacare, I always knew that was going to be problematic. You made healthcare more accessible for the people who need it. I'm not saying that's a bad thing, but how did that work? It was a complete and utter failure. Like, look at health insurance rates now. Nobody wins because somebody is going to have to pay for it. And it makes it more expensive for everybody. I don't know the answer, James. I truly don't. I'm not sitting here like I know the answer. Do this. I don't. But there's two sides to every single coin. And that's what she's pointing out. Let's see, bringing back manufacturing jobs to America. It would help with middle class, but we got to get them jobs back here, which has been slow going.
That's so done and over with. With globalization, this is not going to happen at all. Between globalization and automation, Mr. Chris, that's a great question and a great idea to bring up. But number one, American people make more money, so those wages drive everything up. Two, automation is at an all-time peak right now, and between what they're doing in China to Africa and this Asian subcontinent, good luck trying to bring manufacturing back to the United States, because I
think it'll happen, but I think it won't be like as we know. It won't be manufacturing as we know it. Like, you know, I think the big race right now is AI and data centers. It's pretty obvious. Like that's what we're trying to win right now.
And just as a caveat to that there too, last week we talked about Kevin O'Leary looking to purchase 40,000 acres in Utah and basically ruin the entire Utah ecosystem. Those jobs, the jobs that are going to be there, the electricians and the construction jobs, that's a good little short-term 5-year, maybe 10-year window. But after that, it drops off. All you have to do is look at Virginia and West Virginia. They were promised all of these great jobs for these data centers that are in Data Center Alley, and ask West Virginia exactly what they got out of it. Fuck, that's what they got. They got absolutely screwed. Their water system is still screwed up, you know, but it was already screwed up from all the coal mining that they've done. And they still have some of the lowest in terms of state productivity and GDP out of all 50 states.
How does it destroy the Utah ecosystem?
Because it's going to take up 40,000 acres, and how much water it's going to take up. And it's in the middle of nowhere.
They have plenty of water.
No, they don't have plenty of water.
It's a desert. It's a desert. If they have a bad snow year, they definitely have a water problem.
You can literally look at how much the Salt Lake has shrunk over the past 5 years. They don't have a tremendous amount of water, and one of their income sources is actually selling water to Arizona and Texas.
That data center is not pulling water from Salt Lake or anywhere else. It's using its own, though. That's underground to 40,000 acres. Like, it's completely separate. It's part of it's not even near there. It's far away.
Okay.
Again, it's another thing that there's nothing you can do. Like, if he gets all the permits and everything goes through, like, it is what it is.
And this speaks to your point as well, Chris. When politicians don't listen to the people, politics becomes irrelevant.
I love what Buddha said about mattering. Like, what really matters, our vote really matters, is local. Like, when you vote locally, if you want impact on something like voting locally for your politicians locally, definitely can make a difference in your lifestyle. And I think this one from Mark, term limits in Congress, you want to start to fix things, start limiting, put a limit on Congress. Like that fixes a lot of it. Make Congress responsible for their actions. That would fix a lot of shit. But will we get there? Who knows? Are we in control of that? Not at all.
Stop lobbying. Stop all the billions of dollars in political campaigns.
I agree.
Stop insider trading. There's everything.
You want to fix healthcare, fix pharma.
The entire political system's broken, though. That's both sides. Like, anyway.
Yeah.
We got to wrap, guys. I got stuff to do.
Yeah, we are done. All right, folks. With that being said, that was a nice little debate. We missed some things, but that's all right. Loved your feedback on that last little segment. With that being said, join us this afternoon, 1 p.m. Eastern, for Wealth Webinar, where we're going to get into some really amazing things that are the timing of them are perfect for what's happening. So join us. We'll see you then. With that being said, have a good one, folks. We'll talk to you.